Okay, so this session is gonna be about me revisiting, recapping phases of price delivery, which I have taught before in depth, but this time it would be a short overview type of session, but making you guys understand phases of price a bit better and how to use it the better way. Okay, so starting it, basically there are 4 phases of price: expansion, retracement, consolidation, reversal. You may would have known these. Don't read any of this thing, I would explain in order. Why do we use phases of price at the first point? We use phases of price to give us narrative, the direction to which side we should frame. And after the narrative is set, like bullish or bearish, okay, getting on side with the right direction, dash dash dash. After narrative is framed, narrative is set, it sets it gives us the expectation of what to look for, where to look for, and when to look for, like specific protocol for every other phase. Am I audible properly? Okay, so every other phase of price, I have a specific protocol for every other, specific systematic repeatable framework to study it. I have explained them previously. I would give out the links. This session is about making them easy to use, easy to understand. Okay, so what is the use of phases of price? Building narrative and having an expectation of what to look for, where to look for, when to look for, give you clarity in short. And clarity means high confidence. High confidence means less anxiety, and you will trust yourself more, and so better execution of any of your idea. Okay, expansion, this is the phase of price we want to be framing, and I will not go over how to frame that, because that is the thing which I have been going over the previous days, like framing the higher time frame candles expanding towards the draw using low time frame MMXM. That is how you frame expansion. All other 3 phases start from expansion and end in an expansion. I would explain this in like 5-10 minutes. You want to be framing that expansion, which is the end product of any other phase. Okay, how do we frame expansion? Using high time frame candles OLHC HLC, aligning it with low time frame MMXN, like candles expanding towards draw, framing OLHC of these candles using low time frame, framing expansion in there. This is how I frame expansion. I will not go much deep about it. I have taught it many times. Okay, retracement. This session will be mainly covering the other 3 phases, because this single phase should be clear to you guys, because it is very simple. The thing which is not simple is when to frame it, and how to frame it from other 3 phases. Like when you already know you are framing expansion, then it would be easy for anyone, but the difficult step is framing expansion from any other phase and knowing when to frame this expansion from any of the other 3 phases. So I would be making that thing simple for you guys. Retracement, we look to frame retracement around or at internal levels resting around equilibrium of the previous range. This is just an overview type of definition. I didn't want to give a definition because I have gone in depth over this, but I need to give a definition now in order to you guys, to make you recall it and understand this thing. Okay, retracement is like price has expanded, and the orthodox view of retracement is like objective is pending somewhere there, price starts an opposing move, so you would see this opposing move as a retracement. And how would you frame retracement? You want to frame retracement around the equilibrium of the range, around at internal levels resting around equilibrium of the range, to then frame expansion from there to the objective. I will not go much deeper into that. Just for an overview, retracement to expansion, you want to frame that expansion. Does that the intermediary phase is expansion, as I said. All other three phases, retracement, consolidation, reversal, start from expansion and end in an expansion. We want to be framing that expansion. When the other phases end and result into an expansion, we want to be framing that expansion. Okay, ideally avoiding this and framing the following expansion which happens after this ends and results into an expansion. Retracement is tradable as well. I do trade it just like how I did it on Friday. My gold trade was a kind of retracement idea. This framing it till where? Around equilibrium of the range till internal levels resting around equilibrium of the range. Makes sense? Which I just shared. Equilibrium of the range resting internal levels resting around equilibrium of the range. I framed retracement till there here, and I framed this expansion OHLC, not going too much into it, but leave it for the moment. Mainly you wanna frame the expansion which results after the other phase has ended and the result is expansion. Okay, avoiding this in most scenarios, participating in the result which happens after this phase ends. Okay, consolidation is when price is in a clear range, trading within a clear range high, range low, and staying within this range. You don't look to frame anything until price tags either side of the range. Okay, you don't try to frame anything until price stays within the range. As long as price stays within this range, you don't try to frame anything logically, the systematical way. You look to frame expansion after one side of the range has been taken. How do you frame that? I have taught previously, but I would share an example in like 5-10 minutes. Just a second. You look to frame expansion like could be manipulation here, could be true breakout over here, but you only look to frame an expansion to any side once either side, extreme range high, extreme range low, has been tagged. You don't look to frame anything until price stays inside the range. Okay, so consolidation to expansion, you avoid this other phase, you avoid this other phase, and once this phase ends, you want to frame this resultant phase which is expansion. As I said, every other phase of price starts from expansion and ends into an expansion. All other three phases start from and end in an expansion. You want to be framing that expansion, that resultant expansion. Okay, avoid this and frame the following expansion. Once this ends, when does the consolidation is likely to end? Once it tags the range high or range low, any side of the range. Once this has been tagged, you then look to frame expansion to either side, which has a specific protocol for it, but keeping it simple for now. How do you frame reversal? You look to frame this after the relevant external range has been tagged. May look like how you frame consolidation to expansion. This may look like somewhat like it, but consolidation has a true breakout kind of scenario as well, so not same like the range relevant extreme or external side of the range. Once this has been tagged and price shows reversal, you then want to frame the following expansion, resultant expansion after reversal has been framed and it has ended. You look to frame this after the external range has been tagged. External range has been tagged. External range has been tagged. You look to frame reversal to the opposing side after the external range has been tagged. Avoid this, avoid once reversal has not been confirmed don't participate in this reversal, trade the following expansion. Once the reversal is confirmed, trade the following expansion. You don't try to pick it here. Don't try to pick it here. Frame the following expansion. So this much is clear. Keeping it very simple, as much simple as possible. Now this, as I said, every other phase of price starts from and ends, results into an expansion, like retracement to then expansion, reversal to then expansion, consolidation to then expansion. Expansion is the intermediary phase. Like price can go from expansion to any other phase, but from any other phase it can only go into an expansion. Like expansion to then any other phase, could be retracement, could be reversal, could be consolidation. That is your duty to find out which is the new phase and then act accordingly with the specific protocol for every other phase. Once you have determined the relevant phase, you know the next phase is going to be expansion, because price can't give retracement to reversal or retracement to consolidation or reversal to retracement, reversal to consolidation. Any other phase, it only ends in expansion. Retracement to only expansion, only scenario is expansion, reversal to expansion, consolidation to expansion. Expansion can end up into any other of the three, but the other three can only end into an expansion. Okay, just as how I said, never goes from consolidation to retracement, consolidation to reversal, only consolidation to expansion. Never from retracement reversal, retracement to consolidation, only retracement to expansion, vice versa for reversal, and never from expansion to another expansion. Like hit यार पीछे होना यार मत please. Like price hit an objective, expansion's objective. Now never expansion to another expansion again. If it goes, you let it go. You aren't allowed to systematically frame another expansion immediately after price hits an objective. After price expands into an expansion's objective, you then look to frame, or you then look to find out which is the new phase of these three. Because after price expands into an objective, then it is supposed to shift into any of the other three: expansion into retracement, expansion to reversal, or expansion to consolidation. And then you have the specific protocol for each one. If consolidation, range high, range low. If reversal, you then look to frame reversal from the external side of the range. If retracement, you then look to frame it around equilibrium, around internal levels, resting around equilibrium, right? But never expansion to another expansion immediately after price hits an objective. Okay, always expansion to then any of the other three. Expansion into an objective, then any of the other three, be it X, could be any one of these three, then from that X could be anyone. Always, if retracement, will always end into an expansion. If reversal, always end into an expansion. If consolidation, will result in an expansion always. So expansion is like that sweet boy for everyone. Our motive is to try to find out which phase is price currently in, and then frame accordingly with the specific protocol given for every phase. The easiest is the expansion to frame. Every phase is easy if you know how to frame, but framing expansion should be the easiest, as I have shown multiple examples of how to frame expansion. That is my model basically: framing high time frame candles, expanding towards the draw, framing low time frame examine it, open low high close, open low high close, open low high close. Our motive is to try to find out which phase is price currently in, then use the specific protocol for every phase, and then act accordingly to then frame the following expansion. You wait to find out which phase price is in, and then frame the following expansion, framing the following expansion, avoiding this, framing the following expansion. Now clear and much simple, efficient, I would say. Or if few people have any doubts, I can go over, or I would go over how I explained phases of price previously, like giving a quick sneak peek of the protocol or approach, of the in-depth approach for each phase of price. Only if this much is clear to you guys. तो आके टल जाने किथे टलिए काले मचता है गर्मी लग रही है गर्मी प्रैक्टिस तो सबको ही करनी पड़ेगी भाई मेरे को अभी भी करनी पड़ती है बाद में करूंगा यार पूरा सेशन अब गर्मी में गुजारा आधे सेशन में इतनी सी ठंड के लिए कोई बात नहीं तू आके टल जाने किथे okay then I would go over give a quick sneak peek into how I explained phases of price in depth the previous time. How do we frame expansion? 4 phases of price: expansion, retracement, reversal, consolidation. Expansion is when price is in one side or one-sided or one directional order flow, like only bullish or only bearish, expanding towards a clear directional objective. Okay, we use these POIs to frame one-sided expansion. Okay, bullish expansion, bullish order flow, relevant down closed candles, relevant lows will support price higher, lows will reject price higher, highs will be displaced through when price is in a bullish order flow or bullish expansion. I use opposing candles and opposing swings when framing a one directional move or framing like bullish order flow, bearish order flow, bullish expansion, bearish expansion, as you can see. When bullish, I use down closed candle as its name suggests, bullish order flow. So using bearish candles which would be down closed candles, relevant down closed, not every, and opposing swings, bullish order flow. So using lows as a POI. This is my model basically, catching high time frame candles OLHC using low time frame MMXN. High time frame candles 2 a.m. 2:30 expanding towards a draw, framing low time frame MMXN. 2 a.m. open low, lows will reject price higher in a bullish order flow, right? Using low as a POI. Relevant opposing candles will support price higher. Now retracement, I have two ways to frame retracement, as retracement was the only case when I said this phase in itself is also tradable sometimes in some scenarios but requires specific framework for it. For every other phase I said avoid it completely, avoid this completely. You should avoid this, but when price has a certain framework you can even trade this. Like I took my gold's position Thursday or the last trading day. This move lower was a retracement and I framed that. You need to have a certain framework around it. Rest every other phase except for expansion you would avoid. Consolidation you would avoid, reversal you would avoid. Retracement is sometimes tradable, depends on specific framework, requires a specific framework. But this one is when you avoid. When there is a clear objective still open, still intact, like this is an objective open, still intact, and price moves away from that objective, price starts moving in the opposite direction to the objective, then you frame that move, that opposing move, as a retracement. Clear objective open, price moves away from that objective without taking the objective, and there is a clear objective intact, clear objective, price moves away, this move higher, you would frame this, you would tell yourself this is most likely a retracement, because there is a objective pending and price starts moving the opposite way, starts making an opposing run to the objective. You would then see this move higher as a retracement. And how do you frame retracement? By internal levels, right? Internal level could be a fair value gap, could be a opposing swing. Sorry, by retracement objective, retracement objectives are of two types: an internal level, which is an FVG, and opposing swing. Like this was the opposing swing here. I started moving the opposite way to the objective, then used this as a retracement objective to then move towards the objective. Now using this as the retracement objective, internal level, to frame the expansion towards the objective. IRL to ERL. IRL to ERL when clear ERL is open. This opposing swing was a retracement objective here. This internal level was a retracement objective here. Okay. How you frame IRL to ERL: after price tags the retracement objective and shows displacement from there towards the objective, you then frame retracement to then the following expansion. Like an example as well, price moves towards a clear objective, does not take it, just like here, does not take it, and starts moving the opposite way. You would then view this move higher, this green, this bullish candle, it was the hourly time frame, you would then view this move higher as a retracement. And from where do you frame retracement to expansion? From internal levels. Internal level being respected, price displacing away, you would then frame this expansion towards the objective. Higher time frame candles expanding towards the objective. This is my model. Catching OHLC of this candle, OHLC of this, OHLC of this, using low time frame MMXM. Framing the resultant expansion from the other phase. Other phase was retracement here. So framing retracement to expansion after retracement ends, framing the following expansion. Now, to show you another example, just a second. I won't try to explain this case, the second case for retracement, when I do participate in retracement as well, as you people would get confused. Moving on to the third phase of price, which is consolidation. When price starts moving in a clear range, clear range high, clear range low, just like here, clear range high, range low, and starts trading within it, then don't frame anything until price stays inside the range. Mark out the range high, mark out the range low. You only look to frame expansion to any side once price tag any end. You don't try to predict that it will hit this end, it will hit this end. And there are three ways you can frame expansion from a consolidation: AMD continuation, AMD reversal. These both look same, these both are basically kind of manipulation. This one would be difficult to understand, so these two are manipulation. Like AMD continuation manipulates range low to then objective, you would then frame this expansion towards the objective. So consolidation, wait for consolidation to end. Consolidation is a different phase of price other than expansion, you would then wait for it to end to then frame the resultant expansion. Avoid the other phase, which is consolidation here, frame the resultant expansion. Okay. Clear range high, clear range low, gets manipulated, framing the expansion, resultant expansion thereafter. Okay. Accumulation, manipulation, distribution, AMD continuation. So my model here, catching OLHC of these candles, expanding towards the objective using low time frame exam in there. This is how you frame expansion. Now another example, clear range high, clear range low, tags one end. So you then frame AMD continuation here. After it tags one side, framing OLHC of candles expanding towards the objective, 3M H1 OLHC, 4M H1 OLHC to the objective using low time frame exam in there. Avoid the other phase, participate in the resultant expansion. This is my model basically. Bias or draw you get from 4 or 5 different things. I have listed them below. Then the only step in my model is catching the expansion, which is catching high time frame OLHC OHLC using low time frame exam. Catching high time frame OLHC, 3M OLHC, 4M OLHC to the objective using low time frame exam in there. Now this is also same, consolidation tags one end, you then look to frame this resultant expansion, avoid this other phase, participate in the resultant expansion. So this is done, this is done, avoiding this, framing the following expansion. Now the last phase, example of this as well, clear range high, clear range low, tags one end, manipulates it, you then look to frame these candles expanding towards the objective, 9:15, 9:30, 10 a.m. This is my model, catching OLHC, OHLC, OLHC of the candles expanding towards the objective using low time frame exam in there. You can have a look at my positions in here. Too many of positions to learn. Framed live. Range high, range low, tags one and manipulates. You then frame the following expansion, candles expanding towards the objective, OHLC of this candle using lower time frame exam. This is 30-minute candles, 10:30 and 11 a.m. OHLC towards the objective. And for the people who were already in the mentorship, all these examples would be much clearer to you guys than it were for the first time, right? When I taught you these things for the first time, they weren't making much sense back then. Like, they were making a bit of sense, but they are making much more sense now, right? एक दो तीन चार बनी हुई है कहाँ गया भाई, गया था. Now the last phase, I won't talk about this because even the people who have studied this for like a month, they are still kind of confused, but slowly getting there. This is a complicated topic, so I wouldn't prefer to teach it for the moment. Just giving an overview. Clear range high, range low. You then don't try to frame until price stays inside the range, consolidation. Then frame the following expansion after price tags one end, right? So one end gets taken, specific protocol to frame every way. 3 ways you can frame from a frame expansion from a consolidation: AMD continuation, AMD reversal, true breakout. This one was true breakout. This is true breakout. I did frame it live this day, that's why I remember this position. I took a 5 or 6 hour position this day, framed this true breakout here, clear range high, clear range low, framed it here, and then added to my position as well. This was like which day, 18, I don't remember, 18 March or 18 Feb. Let's check 18 March and 18 Feb as well. I did frame it around there and then added around here. Target, took my parcels around there. Framing candles expanding towards the objective. High time frame OLHC or Chelsea using low time frame MMXL. It was gold 18 Feb, or why don't I search directly? This one. Where is it? 18 Feb it was. This is here. Uh, Almost there. This won't talk about the high time frame framework. Basically framing candles expanding towards the objective. So framing OHLC of high time frame candles using low time frame MMXM obviously. Can see the same range here, true breakout here, right? Which I marked in the example. The same range here, this range high to range low, same 15-minute time frame, gold. $15 on gold, same range high, range low. I used it. Once price left the range, I then look to frame expansion to the objective. So I took some on there, took some there, added to my position there, and took partials off there, then trailed out for there. This was my position. I framed it live. This was my refined position. My main position was around there. I then added, so my average came a bit up and holding it till there. This was more of a 5-6 hour position, framing these H1 high time frame candles expanding towards the objective. OLHC, OLHC, OLHC. So not distracting much from the topic. Now framing the last phase, which is reversal. When price reverses, changes the direction of order flow after hitting the relevant objective. You don't try to pick this, you don't frame any other phase, you avoid this, right? You avoid this. After reversal is put in, you then frame the following expansion. Always you then frame the following expansion after consolidation has ended, after price has tagged the range low or range high. After reversal has been put in, you then frame the following expansion. Avoid this, frame the following expansion. Every other phase would result into an expansion. You use this to frame this, using this to frame this. Don't try to participate in here, don't try to participate in here. This is much easier and gives you much bigger rewards as well. This is much easier and high probable as well. Your most of the losses or your else would come when you try to pick it here. This would be much easier and much more rewarding. You just gotta know when to look for, where to look for, what to look for. Systematic approach. How do you frame reversal? Relevant swings, range extreme. Relevant swings, I have talked much about them. Relevant swing, price reversing off a relevant swing, you then look to frame this following expansion to the objective. Relevant swing, price framing reversal off over there, you would then look to frame this expansion higher, frame this expansion higher. Relevant swing, reversal has been put in, you then look to frame this expansion lower to the objective. Expansion met with the expansion in the opposing side is a reversal. After reversal is put in, you use this as a framework to then frame the following expansion. Price hits the relevant swing, forms reversal there. You then look to frame the following expansion towards the objective. Framing high time frame candles, OLHC, 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 OLHC towards the draw. Daily chart, relevant swing, price reversing off of there. You then look to frame the following expansion after reversal has been put in towards the objective. Framing OHLC, OHLC of these high time frame candles expanding towards the draw. Daily candles. So using lower time frame H1 or H4 SM towards the objective. So almost done. I did give a simple breakdown and in-depth breakdown as well, which I didn't think I was supposed to do, but I did it anyway. So how was the session? If no doubts, I would stop the recording. बनी हुई अनजाने के वास्ते बनी हुई, और मैं जल्दी से पंखा भी लगाऊंगा, फिर मेरे को लग रही है गर्मी. Yes, I started taking it from like making it easier first, then going into the advanced thing so that you people first get or make it get into your mind easily. Once it gets into your mind, then you can frame it the advanced way as well, like how I did it for my model 2-3 days ago. First I made it simple for you guys, then took it advanced as you people were able to learn it the simple way first, then you can frame it the advanced way as well. Nothing is hard, it's just that you have to make it simple for you. And this recap, or I would say revision type of phases of price, was much needed, because the next session, which is going to be about next few sessions, 2-3 sessions, is going to be about daily profiles, and you people would have needed this brush up or recap on phases of price, as it would help you understand those daily profile, how I frame daily profiles the my way. It would help you understanding much better. कहाँ पे कहीं पे तो पिन करा था, राइट? इधर ही मेरे हिसाब से. Yes, entry criteria has been done. Establish high low of the candle, swing back by AQ, contribution entry. Next thing is daily profile. 1 2 3 4, हाँ 3 ही लगा लो, 3 या 4 सेशन लगेंगे मैक्स, 3 or 4 sessions for daily profiles, but this revision on phases of price was much needed in order so that you can understand those daily profiles better. So I would stop the recording.